Welcome to the latest episode of our podcast series for financial advisors. Today's episode is Becoming the Client's Financial Concierge. $2 billion UBS breakaways set their sights on being fiduciaries for the long term. It's a conversation with Russell Crowe and William Deal, partners and managing directors of Beacon Pointe. I'm Mindy Diamond, and this is the Diamond Podcast for Financial Advisors. This podcast is designed for advisors like you who are interested in learning more about the evolving wealth management industry through candid dialogue with breakaway advisors, those from the C-suite, and industry thought leaders. It's available on our website, diamond-consultants.com, as well as Apple Podcasts and other major podcast platforms. So be sure to subscribe and share it with your colleagues. At Diamond Consultants, our mission is to help advisors live their best business life. We want every elite advisor to find exactly the right place for their business and their clients to thrive, whether it's at a wirehouse, a regional, boutique, or independent firm. As the industry's leading recruiters and consultants, we've transitioned more than $250 billion in assets under management in the past decade. And each year, 25% of transitioning advisors who manage $1 billion or more are our clients. Curious about where, why, and how advisors like you are moving? Download the latest Advisor Transition Report to learn more, including intel on recruiting deals and our insight and analysis on the latest trends in the wealth management space. You'll find it at diamond-consultants.com/transition report. Or if you'd like to talk, feel free to give us a call at 908-879-1002. I'm always so impressed by advisors who see the handwriting on the wall. They recognize how their clients' needs are evolving, and they grasp how the industry is changing. As a result, they look at their own businesses, the firms they work for, and their goals, and ask themselves the important questions, not just about the short term, but the long term as well. Russell Crowe and William, or Billy Deal, invested nearly 3 decades each in the wirehouse world, most recently as managing directors at UBS. They watched as the financial advice industry morphed from a transactional model to one in which advisors served a wide variety of clients. That is, financial advisors were more embedded in the lives of their clients, with seats at the table for decisions well beyond the world of stocks and bonds. They were now expected to be true fiduciaries, serving their clients not just as a financial advisor, but instead as a financial concierge. It was a concept that fit well into Russell and Billy's vision for their business, ultimately leaving the wirehouse world in October of 2023 to join Beacon Pointe Advisors as the first breakaway team to integrate with the firm. In this episode, they share a compelling narrative around the changes they saw in building their extraordinary business, the evolution of their clients' needs, and how each impacted their decision to transition to Beacon Pointe and not another wirehouse, or to build their own RIA themselves. And they offer actionable advice for other advisors considering change, plus much more. There's a lot to discuss, so let's get to it. Russell, Billy, I am delighted to talk with you today. Thank you so much for joining me.
We're glad to be here. Thank you for having us.
Mindy, it's Russell. Thank you again. We're delighted to be here.
You bet. All right, a lot to talk about, so let's jump right in. Let's start at the beginning. Tell us a little bit about yourselves. I believe it was a 24-year professional path to joining Beacon Pointe in the summer of 23. So why don't we start with you, Russell, and then we'll go to you, Billy.
Certainly, Mindy. Russell Crowe. I grew up in the hill country of Texas in a very small town of about 1,000 people, and Dallas was always the shiny object, big city out in the plains of Texas, and I thought I would get there someday. And after undergrad and graduate school. Finally got to Dallas, and then they promptly sent me to Houston with Billy. We spent a couple of years in Houston and then made our way back to Dallas for the rest of our career.
And you, Billy?
Yes, Billy Deal. I grew up here in Dallas. Add a little color to what Russell said. We both went to business school, and our first firm, Morgan Stanley, we met in the training program. And as we like to tease sometimes, we decided to be partners before we ever picked up a phone. And I think the camaraderie over the last 25 years in the partnership has just been a godsend. Russell's been a fantastic partner. And I know that there can be conflicts when teams are merging and splitting up. But as I like to say, zero splits very nicely down the middle, 50-50. So we've been 50-50 partners through thick and thin, the ups and downs for our entire careers.
How wonderful. Partnerships are a fabulous thing when they work, and it sounds like you guys have really nailed that. So we'll get to more about what makes it work or tick later. I'd love it if you'd give our listeners a sense of your overall business. So I know you guys manage today about $2 billion in assets. Give us a sense of a couple of things. How many clients or client relationships do you have, and what kind of work do you do for those clients?
Mindy, I'll take that one. This is Russell. We have approximately $2.2 billion in assets and approximately 50 families. Now, when we say 50 families, you could think of that as a pyramid with the patriarch, matriarch, let's say, at the top, and you may have numerous generations. So there's a lot more than 50 accounts, but there's approximately 50 top accounts that make up that 2.2 billion. And we've been fortunate in a way to operate like a financial concierge, if you will. When families are making decisions around their wealth, whether that is loans or insurance or investments or properties or various other decisions that involve investing funds, we've been privileged to help opine on those decisions and maybe give them a sense of direction and some analysis on how to do things in the most efficient, both from a cost perspective and a success perspective for our families.
Yeah, and I want to get to how that approach of being a financial concierge, financial quarterback for your obviously ultra high net worth clients, how that changed for you throughout your career. So, Billy, you started out, you met in the Morgan Stanley training program, but tell us a little bit. I know that you spent some time at Goldman during the 25 years and then most recently UBS before joining Beacon Pointe.
We started at Morgan Stanley in Houston, eventually moved to Dallas. That's where we knew we wanted to be. After 3 or 4 years at Morgan Stanley, we went through the dot-com collapse, and we were part of the high net worth group at Morgan Stanley. Morgan Stanley decided to consolidate their Dallas office back to Houston, and we had already planted roots here in Dallas. At that time, word got out that Morgan Stanley was closing their office, and Goldman gave us a call, and we formed a partnership, and we moved over to Goldman. We were there for 7 or 8 years, and then during the financial crisis, we left Goldman and joined UBS and spent a good part of our careers, 14 years at UBS, and most recently joined Beacon Pointe, and that would have been August of last year, 2023. It was kind of our first change getting onto the fiduciary side of the business. That's it in a nutshell.
Thank you for that. That's good orientation. So back to the business, Billy, maybe you can continue a little bit. Tell us a little bit about your investment approach and what your team looks like.
Sure. Let me start with team. So we have a fairly simple structure. There are 6 team members. Russell and I are the investment partners, and then we've got 2 analysts and we've got 2 client associates. And the way we kind of segment responsibility, projects, trading, managing various portfolios, that typically falls under the analyst bucket. And we've got 2 very sharp folks that work for us, Sarah Stubbs and Pierce Halstead. They work collectively together, sharing those responsibilities. And then on the client associate side, they are responsible for handling day-to-day items for clients, wires, cash needs, funding accounts, opening accounts, and they share those responsibilities. And with 6 people, we all work in one big room. So if you could imagine 3 different trading desks, if you will, we're all spread amongst the 3 trading desks, which makes conversation and dialogue very fluent. I need to talk to Julie. I need to talk to Pierce. We're all in the same room. I just peek my head above the divider and we can have a conversation, peel off to the conference room if it's going to be a little bit longer. And so it's a very collaborative, dynamic atmosphere.
Let me ask you a question. When you say collaborative, I'm thinking about 2 things. It sounds like you really value working together. So not only with your team, but collaborating amongst the 2 of you, and 25 years together, we see partnership in the last decade or 2. The big firms have really forced a lot of arranged marriages, and they don't always last. So what do you think the secret to your success is as a partnership? What is it that's kept you together?
Mindy, I'll take that one. At the core, our experience has been that great partnerships work when the partners have very different skill sets. And so one simple way to look at Billy and myself, I would put myself 60% in the EQ category, and I would put Billy 60% in the IQ category and 40% in the EQ emotional category. And so when you have that kind of mix, somebody might relate to prospects and cold calling and presentations 60%, and maybe the internal math equation you all have to do, but maybe that's 40%. Billy might be the flip of that. And so that allows us to play to our strengths because we have a partner that's then playing to their strengths. Yeah. I think if you look over our 24, 25 years, that has been a relatively unspoken truth that's just been apparent between the 2 of us. And I think that's really helped us tremendously over the years.
Yeah. And I think in my experience, I've had the privilege now of interviewing so many successful partnerships. And it's clear to me that the very best ones are about those that have complementary skill sets, where not everybody does all the same things, but one's EQ complements the other's IQ and vice versa. So I love how you said that, and thank you for sharing that.
What I would say to that too, Russell took a little bit of a dig on my EQ, and that really hurts my feelings, but I'll let that slide. I'd say too, we've been through this, but I trust Russell. I think he trusts me. He's my friend, and we try to make it fun. It's really as simple as that.
Thank you for sharing that. Before we talk a little bit about get into the business itself and the decision to join Beacon Pointe, I want to just ask you about life in the wirehouse world. So 3 firms. You were young in the business and only at Morgan Stanley a short time. But if we look primarily at UBS, where you spent 14 years, and combine that with your time at Goldman, how do you think life in that traditional space changed over time?
That's a really good question. I would say, looking back at the start of our careers, you would look up to the folks that were 3 or 4 years ahead of you that had made it, right? Had gone out there and attracted enough clients to where they were self-sustaining. You would identify with those because that's what you aspired to be, because you had to make it to that rung on the ladder to continue. And so there's a lot of pressure originally getting into the business to make it to that first rung. And there's a clock ticking for you to do that. And when we looked at the folks that were successful, the business, I think, was a lot different then. It involved listening to a research call in the morning, calling clients on individual stocks and bonds, maybe ventured a little bit into some hedge funds or some private equity. But when it came to estate planning and tax and really getting your hands around the full financial picture, those were kind of other people's responsibilities that didn't really fall into our bucket, so to speak. And 25 years is a long time. Didn't happen overnight, but like the proverbial frog in the pot, over time, you've shifted to where if you want to have a seat at the table for clients, you have to be willing to do more. And that really evolved into being full circle, as Russell said. Anything that involves a dollar, estate planning, helping with tax, talking about and thinking about decisions within private companies, dynamics with family members, generational wealth. You really get pulled into a lot more deeper discussions with clients. It's interesting to think what day one in the business would look like if I got in today. It'd be very different than what it looked like 25 years ago. So I'd say there's been a lot of change in the last 25 years.
Yeah, I want to just ask you a follow-up question about that, Billy. So it became apparent that we wanted to do more for clients, and that's the whole notion of becoming the financial concierge, which is a term I love. Was the decision to eventually leave the traditional space, UBS at the time, because you wanted to do something you couldn't where you were at UBS, or more driven by frustrations you were feeling at UBS?
I would say, just to harken back to something Billy alluded to a second ago, and then move into your question a little bit. 25 years ago, the business was about a transaction for a client. Today, the business is maybe completely opposite. It's primarily fee-based for most advisors in the high net worth space. It's primarily fee-based, and it's much more financial concierge. And I think that transition began to happen in the industry. Wall Street firms recognized that as well. They are the smartest people in the room. They're cutting edge. They're nobody's fool. They saw exactly how that was transitioning in the industry. What maybe they missed was the increasing rise of the RIA model. That may have happened somewhat on the stealth, but the idea that advisors were moving from the transaction of the day, the stock of the day trade, into an environment where you're advising like a consultant, like a financial concierge. I don't think Wall Street missed that for a minute. And in fact, they began to do internal education as far back as 10 and 12 and 15 years ago to encourage it, more than that, even 15, 18 years ago, to encourage advisors to begin to move into those places that could add more value than just a transaction stock trade on the screen, which really what the environment was when we started was much more of just a straight up transactional call to buy or sell a stock or a bond.
Mendy, you asked about the transition from UBS to Beacon Pointe. So UBS changed a lot in the 14 years that we were there. And I would say for the most part, all for the better. The high net worth platform was built out and was strengthened over the 14 years that we were there. And I would tell you our experience there was fantastic. The managers that we had were there to help. They did help. They did listen. And the platform when we left is an extremely strong, robust platform. They're a formidable competitor out there, and they're good people and teams that work at that firm. So we left with nothing but the utmost respect for UBS. And I would say that it wasn't that we were running away from a problem. We were very happy at UBS. We were running towards something versus running away. So if you were to ask me, okay, great, Billy, what were you running towards? We were running towards a pure fiduciary model. And it wasn't that our clients were saying, hey, I want you to be a fiduciary, because they were clients, they knew us, and we had great relationships with them. But Russell and I did find that when we would go and meet and interact with new prospective clients, the question would come up, are you all a fiduciary? And we wanted to have a hard answer to that. Yes, our entire firm is a fiduciary. And it seems like that question is coming up more and more. So again, UBS is a fantastic place. I have a lot of friends there. The people that ran the division, I can still consider friends and have nothing negative to say. We just felt like we wanted to go in a different direction and pursue the fiduciary model.
Love that, Billy. I thank you for sharing that, because the truth of the matter is, I think that the very best and most successful advisors move not because they're running from something. There's almost always some frustrations or things you might like to better. But for the most part, the best advisors are looking at things opportunistically. They're not running towards something, and they're not running away from something. And the other thing I think that's really interesting what you said is that in the last, say, 10 to 15 years, the term fiduciary went from being the fiduciary standard, went from being something that only those in the wealth management who worked in the wealth management industry knew. It wasn't really a mainstream term. The average American, we all assumed that our advisors were acting as fiduciaries. And it wasn't, I think, until the financial crisis in '08 that term became more mainstream. So tell me a little bit about that. What were you hearing from clients? What did they know of your not being a fiduciary of UBS? And what were they looking for when demanding or asking if you were one now?
Mindy, I think it can be summed up in maybe something that is going to seem too simple. I think if you went to Google and typed in, how should I hire a financial advisor, or what kind of financial advisor should I hire? What should I consider? I think you'll find that a plethora of email sites will come up saying you need to hire a fiduciary, someone who is bound to put the client interest above the firm, above themselves, et cetera. I don't think that really existed 20 years ago, that you could, well, the internet may not have been exactly the same, but you really wouldn't have gotten that answer. I think you're right that coming out of '08, this concept of fiduciary became more important. But as the internet began to pick that up and more fiduciary independent RIA firms, as I mentioned earlier, the rise, that almost stealth rise of this RI ecosystem took off. I think the concept that these people are held to a standard that parts, mind you, of Wall Street are held to, but not all. And so I think that became almost ingrained in people's minds, that if that's the gold ring at the top of the heap, that I've hired a fiduciary, and that gives me the greatest sense of comfort and the greatest sense of trust that my advisor is on the same side of the table as I am, that I think has become more and more ingrained in not only wealthy families, but anybody looking for a financial advisor that opens the internet and says, how do I hire one? I think that's just become sort of second nature. And Billy and I began to hear that question over the last 10 years more and more. And you'd have to be really dense not to go, wow, there's a change afoot, and we better pay attention to it.
Let me ask you a question. Did you not think of yourself as fiduciaries while at UBS or at Goldman Sachs or at Morgan Stanley? That's what's curious to me. I ask this question a lot, and I'd be curious what your answer is. That, right, as long as you are at a traditional brokerage firm, you are held to the suitability standard, not the fiduciary standard. But I haven't met too many successful advisors that didn't think of themselves as fiduciaries. They would always have put their clients' interests ahead of their own. They would always have wanted to do right by their clients. So how much of a difference does it actually make truly being a fiduciary and thinking of yourself as one?
That's a really good question, Mindy. I guess how I would respond is that when we called clients and told them about the move and the fiduciary, most clients responded with, I thought you were a fiduciary.
Yeah.
The second thing that I would say, when we brought our clients over, we brought all strategies over, same strategy, same fee, same structure, same everything, did not have to change anything about how we function as a team. Now, obviously, we had different systems and different things that we had to kind of mold our operational efficiency into, so we had to change how we do things. But we were essentially, the way we like to think about it, running a fiduciary business inside of a wirehouse or a Wall Street firm. So yes, we couldn't call ourselves fiduciaries, but we were working with and engaging with clients as if we were. And that's why I said, really, it wasn't that important for existing clients because they knew us. But I think it is important because, as Russell said, if you're talking with a new family, they probably are looking at some point on the internet, what should I consider when I'm hiring a new financial advisor? And that is, number one or number two things to consider. And it was clear that that's something that was in people's minds. And so the questions really came up from a prospecting standpoint. We felt like we needed to be with a firm that was, a fiduciary top to bottom. Now, if we had this call in 5 years and you asked me, hey, what are some of the difference that you see, whether it's culturally, platform, being at a fiduciary versus being at a wirehouse, I probably would have a better answer for you then. But we felt, we already had a fiduciary business and it made sense to align ourselves with a firm that was a fiduciary top to bottom.
So in the time in your tenure, let's look at just UBS, the last place you were, the 14 years. Were there ever things that you couldn't do for clients that you wanted to do? Like you mentioned tax planning, but you can't give tax advice as long as you work for a wirehouse firm. But you say that the platform was outstanding and it was a great experience, which is amazing. So were there any things you were not able to do, or it was really, truly just about wanting to become a fiduciary?
Yeah, Mindy, I really think if you peel the onion completely, there was something we could not do at UBS that we can do at Beacon Pointe. Now, there are nuances. The mousetraps are set up a little different. The way the systems are built are a little different. But I would say to you that the big Wall Street firms are who they are for a reason. That they've owned wealth management for 50, 75 years. And since the existence of the business itself, they've owned that space. And it's only been in the last 10 to 15 years that you've seen the rise of Schwab and the independent RIAs and the custodians that now are amazingly even larger than some of the Wall Street firms as on an individual basis. Look, I think Billy and I would not be answering the question accurately if we told you that if we had some sense that Wall Street doesn't analyze this industry and know exactly where they want to be. Let's face it, you've got some of the most forward-thinking, thoughtful, smartest people that have been in the industry in businesses that have existed for over 100 years. They know the space just inside and out. But I do think that the size of Wall Street and those firms precludes some functionality and some kind of grassroots capability, and for Billy and I to have some influence on the direction of the firms. And the size of the institution just doesn't allow for that kind of flexibility and influence. And so I would say we left to fully enwrap ourselves as fiduciaries, but I don't think I'd look and say there was something I can't do or couldn't do at Goldman or UBS that I can do at Beacon Pointe. It's just a function of real ease and simplicity and setting our course for our business as a fiduciary that attracted us outside of Wall Street.
I would add and say this: UBS is a multi-billion-dollar global financial firm with a fantastic reputation and an extremely long history. The firm does a lot of different things, and when you're attached to wealth management, you don't necessarily tap into all the expertise and different line items that a large global bank like UBS does. But the 14 years that we were there, they did a fantastic job building out a high net worth division that would give us the tools to handle the complex needs for clients. The challenge was not we went to an independent firm to do things that we couldn't do at UBS. The challenge was, how do we find a fiduciary firm that will let us do everything that we did at UBS? That was the challenge.
Right. Well, so that's my next question. It sounds like for you, it was independence or bust, because the only way for you to be a true fiduciary was to join the RIA space. So at what point, how long into your tenure at UBS did you begin to get curious? And how did you go about getting educated on all the different ways to enter the RIA space?
Mindy, that's a really good question. I would say that the full process of Russell and I looking at each other and making the decision we need to be at a fiduciary firm to the time that we showed up at Beacon Pointe was about 2 years. And I don't think it necessarily takes that long. That's just how long it took us to figure out the right place. So we explored starting our own firm for a good bit, and we closed the door on that after about a 9-month process. Reason being, Russell and I really enjoy working with clients. And with 6 people, if we started our own firm, one of the 2 of us would have to shift our responsibilities to running a firm and not working with clients. And that didn't really sound appealing because we really enjoy doing what we're doing. So we shut the door on that and then started exploring joining a firm. But like I mentioned, the challenge was with however many independent firms out there that we could probably join with, how do you find a firm that's got the platform that can address and has a good depth in the areas that we need? And it eventually led us to Beacon Pointe. And when we were looking, we made an outgoing call to Beacon Pointe. They had built up a pretty strong platform that allowed us to step in and literally do everything that we need to do and clients want us to do that they got accustomed to at UBS.
Mm-hmm. So you bring up a very good point that that's sort of the 2 subsets or the 2 ways to enter the RIA space. One is to build your own. You looked into it. You are right. It is the heaviest lift, large ecosystem born to support the breakaway advisor. It still means there's a heavy lift, not only in building the firm, but running it over time. And so the second option is to join an established firm. The upside of that is not having to build something from scratch and leveraging a 20-year history that's already been built out. The downside for some is the notion of not owning 100% of the pie, of giving up equity, of giving up name brand, of all of that. So how did you reconcile that part?
Mindy, it's interesting. Billy and I have always served at the pleasure of the king and queen of our clients, and we've always served at the pleasure of the firms that we've worked for. I don't think, honestly, it ever crossed our mind. We didn't have this ego notion that we needed to have our name on the door, or we never branded our team inside of Goldman or UBS, which one of the things you asked earlier was, how's the business changed? You see all these teams now have their own website and their own names. We just really never focused on that. We just focused on building the business. And so I don't think, honestly, it ever crossed our mind that we needed to have our own name brand. I think we were delighted to fold in with a great group of equity partners, really like the people. That was a huge part of the decision. Matt Cooper and Billy and I spent a lot of time together, and then we got to spend time with Shannon UC. And so those things made us feel great about all for one and one for all, not the Billy and Russell show. I don't think ever even really crossed our mind that we needed to have something with our name on the outside of the building.
Yeah. And plenty of people do, by the way. So in that particular instance, those folks would not go in the same direction you did. But for you, it worked. So let me ask you a couple of questions about that. As moving from Goldman to UBS, or with it from one traditional firm to another, usually comes attached to a significant transition package. How did you reconcile or rationalize joining a firm where the short-term upside would be considerably less than what you could have gotten if you moved to a traditional firm?
I think the wealth management business, when Billy and I started, and I think even today, there's a number of young people that come and spend time talking with us occasionally saying, how did you build your career? The entire business is driven by entrepreneurs. Now, they may not think of themselves so much as entrepreneurs because you're working for Goldman or UBS or Morgan Stanley. You think you're taking a job with a big firm until you get to the seat and the office manager says, there's the phone and there's your spreadsheet of all the people you think you might want to call on. Go to work. And you've got 24 months to be self-sustaining, so get after it. You quickly realize this business is long-term in nature. The people that do the best have a very long-term perspective on their career, and they have a long-term perspective, at least in our opinion, on their success, that you build it over decades, not over a few years. And so I think it was very natural for Billy and I in the Beacon Pointe transition to think about it one more time in our career. We spent 14 years at UBS. It's not like we jump every 2 or 3 years, as you can tell. So once we had really thought through that decision, picked the right firm, picked the right partners and people, and could become fiduciaries, the idea that we would take a long-term perspective on success with Beacon Pointe honestly was pretty natural, because our whole career has been this very long-term entrepreneurial, build it over decades and time, and you will do well along with your clients doing well. So I think that actually is, for the most part, in our view, a very natural success perspective for wealth management people that are in the business generally for decades upon decades.
Yeah. And I know that equity is a big part of the Beacon Pointe deal. How did you think about that?
Yeah. So, Mindy, it's a growing firm. We like the people here. We like the people that we met. And it felt like the group that we attached ourselves to wanted to put clients first and grow the firm. We like the idea of being equity partners. And the only way our equity does well is if we do well by our clients, because they're all at will, right? If they decide they want to do something else, they have the freedom to do so. And if we service our clients well and the firm services clients well, it's going to attract more clients, and that would obviously be good for the equity. And we like the idea that our incentives and compensation are completely aligned in that regard.
Love it. Matt Cooper was on this podcast along with a representative of KKR who backs Beacon Pointe. So maybe it's a good time now. Let's take a step backward and just in a couple sentences, share with us what the Beacon Pointe value proposition is, because to make a statement that you believe that the platform and the resources to serve your high net worth clients was really robust at UBS, and that Beacon Pointe's platform was able to allow you to do everything you needed to do and then some, they must be doing something right. So tell us a little bit about that, and if the KKR backing impacted your decision at all.
Yeah, Mindy, Beacon Pointe is, as you probably already know, really burst itself in the institutional space. That was a heavy part of the background. And that institutional consulting world is an extremely sophisticated and must be by nature product heavy development, because you've got to have every section of the institutional consulting world mapped out with managers and private equity and alternatives and all different types of independent managers around the country, investment managers I'm referring to, that you bring to your clients as the consultant. So I think Beacon Pointe already had a very deep history in the institutional world that they then brought to bear on the wealth management world that has obviously grown pretty dramatically over the last 22 years. As the Schwabs and the Fidelities and the other big custodians of the world and asset managers of the world have become so much more prolific in the last 15 years, 20 years, so has Beacon Pointe. Michael Dow running the investment team. We have a full-fledged Wall Street and more offering, to include even more grassroots investments that maybe Wall Street typically wouldn't dip down into as much. I think that was just really born because the firm was so institutional by nature early on, very sophisticated, and then developed wealth management over the last 20 years. That made us feel extremely comfortable about the platform and the systems and the capability that the Beacon Pointe has.
And tell me about the KKR backing. Did that enter your thought process at all?
When you've got a bunch of different firms that you might engage with. So, Mindy, leaving a wirehouse, Russell and I were concerned that maybe the firm at large would hear that we're looking around, and it could be detrimental to our careers, although I think the folks over there at UBS are well-intentioned. And we were good friends with everybody, but you're concerned about that, right? You don't go necessarily announce to everybody that you may be changing firms. And so you got to be very careful about how you engage in dialogue with different firms. You know, the fact that there are 20,000 plus different firms out there of various size across the country, a smaller subset that are coast to coast and larger, and even a smaller subset still that have the resources and the infrastructure that would match what we utilized on a daily basis at UBS. the fact that they partnered with a firm like storied history like KKR, and KKR partnered with Beacon Pointe with the same equity class as all partners. It's not a different equity class with super voting shares or pick shares or financial hurdles that could back into a larger ownership in the overall company. They're a minority shareholder, equity partner in the firm, which gave me a lot of confidence that a large private equity firm felt good enough in the platform and the people that were here to put themselves in the capital stack in that fashion. And that said a lot to us, yes.
Okay, let's talk a little bit about the transition. So, was it difficult? Like, who supported it? How did your clients respond? What went particularly right? Anything that went wrong? Tell us a little bit about that.
Mindy, great question. Every advisor that may listen to this is going to feel our pain. Whether you're moving from Morgan Stanley to Goldman or Goldman to UBS or UBS to Beacon Pointe or anybody else, that 1 year period of transition is extremely difficult. First off, you have to be impeccable at following every legal rule that there is, because you just can't afford to ruin your career with a silly mistake. And then you've got to be incredibly confident that when you sit down with your clients who you've not talked to about this, and then you do talk to about this, that you think they're going to have a positive reaction. Otherwise, the entire deal can fall apart, and so can your career. So from a stress standpoint, from a legal standpoint, from a conversation with client standpoint, and then finally, Mindy, you've got to go to your significant other, spouse, kids, and say, guys, look, you're probably not going to see me for the better part of 12 months here, because this is going to take weekends and nights and early mornings and travel, and I'm going to make executive platinum on American, and et cetera, et cetera. That is the reality of a successful transition. It is a full-on commitment for that. Let's just call it approximately a year period. Even though we had not transitioned in 14 years, but we had done it a couple of times before, Billy and I were in no wise in the dark about how hard that was going to be. And I think that maybe the fourth or fifth, if I can, component of a transition that's always tricky, again, whether it's to Morgan or UBS or wherever you're going, you do have to learn an entire new system. The trading systems are different. The billing systems are different. Just pretty much everything's going to have nuances to it. So at the same time you pick up and leave, you're immediately working on entirely new systems that you've never seen before. And the Schwab custodian's different than the Goldman or UBS custodians. It is just an incredible load of stress for that year. If you keep your head down and pray constantly and have a great partner like Billy and a great staff like we do, and everybody's together, this can be very successful. But it was certainly challenging. It is no more challenging moving from Wall Street to RIA. It's just challenging moving, because you've got 50 families that have relied on you and you have deep relationships. And in one moment after the fact, you've got to come tell them I've moved. Wow, that can really cause some sweat out.
Mindy, and I'll add just a little bit to that. Happy to report, after getting through the transition, close to 100% of our clients followed us, which was fantastic and a huge blessing. Going through that and that process, Beacon Pointe did a really good job of trying to get a team on board, coordinating with Schwab and trying our best to come up with a framework and a plan to handle the transition. There were quite a few unforeseen things that popped up, like, oh my gosh, we didn't think about this, or this didn't connect, but it was all hands on. We figured it out. What I'd say is, if there's another breakaway team that joins Beacon Pointe, we got a pretty good playbook on how to do it now that we've already gone through the process. So, to some degree, we're a little bit of the guinea pig, and we worked through all that. And you're going to have any of these moves, you're going to have these problems, but we had a lot of really good support, and we worked through them in a very efficient and timely manner. And I would say, you asked what went wrong. I wouldn't say that there was a whole lot that went wrong, but I would tell you the biggest challenge was that when we reached out to clients and told them the story about how we were moving and why, we were just surprised at how many clients said yes right away. We thought it was going to be a more gradual process. And with the number of clients that said yes right away, we had a bottleneck issue. And so, high class problem to have, yes, but that was probably one of the more stressful challenges, is trying to address the volume of clients that wanted to come over in a very short period of time.
First of all, I love the honesty. Transitions are hard. And you are right, they are hard, whether you're moving from one big firm to another or you're moving out of the traditional space to go independent. And no matter how much support you have, and no matter how many people surround you and scaffold you, at the end of the day, it's all hands on deck, and it's hard. And it's emotionally hard. It's challenging. And you guys are still within that 12-month period. A couple of questions came up as you were talking. One, I want to make it clear. So you were Beacon Pointe's first team recruited from a wirehouse. I imagine that learning curve that you're talking about was very true, because what we find is that it's even a language barrier. People in the RIA space don't always speak the same language as people in the wirehouse world. So are there any specific examples you can share with us about what was particularly hard or what was particularly different for you moving from one world to the other?
Sure. I would say, Mindy, one thing that is different and yet changing every day in the RIA space that you might consider is different than Wall Street. One of the things that is so attractive about the Wall Street firms is they're so vertically integrated. The custodian model, the investment advisor model, and the asset management model, to a very large extent, are all the same firm. They're just on different floors in the office building. So if you have a problem at Goldman with a custody issue, well, you just call down to the 7th floor and say, hey, Jim, in custody, our client's got a problem. And that's a very fluid, very connected environment. When you move to the RIA space and you're using an independent custodian, an independent advisory firm, and an independent investment management boutique that you may have hired, well, they all have their own compliance departments. They all have their own operations departments. So it is certainly a nuance to connect all those conversations for a client issue, client need, if you will. It's not an impossibility. It's just maybe a couple of more phone calls, and you've got to build out your spreadsheet of who to call and who those people are. Where when you're in the big Wall Street firms, you call downstairs, and whether it's Sally or Jim or Kevin, we all work for the same firm, and I need you to help me with a problem here. That certainly is a learning experience when you go from Wall Street to RIA. That being said, 10, 15 years ago, that may have been a much greater problem or hurdle or just stress to deal with. Now, knowing that Schwab and Fidelity, the two biggest really in the RIA space, are so well connected with their RIAs, I think that differential is diminishing relative to Wall Street. But that's certainly a reality that you don't have to be a rocket scientist to see the difference in how those two, the different firms work.
I appreciate that honesty. It occurs to me, so you moved in August of last year. You're at the 10 or 11, almost approaching the 11-month mark. So I imagine there's still pretty much a learning curve. Do you feel like you're on the other side of it, or getting to the other side of it where it feels more like smooth sailing?
Yeah, Mindy, I think we're there. The first thing is getting clients over, getting them set up, organized to where they can see their accounts in a very similar organized fashion, learning the systems, reporting systems, getting through tax season, and then spending the time to learn new systems and create operational procedures for the team that take 5-hour tasks down to 20 minutes. And we spent a lot of time doing that at UBS, trying to get our process for the team on how we do things there are a lot of repeat motions that you do for all your clients across the client base. And so how do you get operationally efficient to where you can do it in less time with zero mistakes? And so we've been spending the last 3 months doing that. And I would say we are now, when it's been this way for a while, but we're fully functional, operationally efficient, moving forward, actively engaging with clients and trying to meet new families.
Yeah. And you moved 100% of the assets, which
Yes.
pretty much answers the question.
Mindy, if you would, I had one more thing to add on there with Billy. One of the things that's probably been refreshing for us in this move is, and maybe this is just indicative of Billy and I, we don't pretend to be the sharpest knives in the drawer. The way we built our career is by calling on very sophisticated, wealthy families that asked us very hard questions over a career. And Billy and I, 99% of the time, had to say, wow, I don't know the answer to that question, but I'm going to go find out. If you do that 50,000 times over a career, all of a sudden you've got some mental files built up of 50,000 answers to 50,000 really good questions. And you develop what we would call tribal knowledge or experience, a battery of experience that really helps you in the business. I think when we made this transition, Billy and I had to jump back to those days, which are frequent, where we had to say, I don't know the answer to that question, but I'm going to go figure it out. And we've reinvigorated ourselves in a way in that learning experience that, frankly, is how we built our entire business. Going to find the answers to questions that we don't know is the quickest way to develop expertise and experience, in our view.
Yeah. One more question about the transition, and it's an important one. One of you just said that you needed to be impeccable about following the legal rule so that you don't blow up your career. And it's notable that you left a firm, namely UBS, that is a non-protocol firm. You have a large book of business in terms of assets under management. You have a relatively small number of clients in the scheme of things. That makes it easier to move a book with 50 families than 200. But how challenging was the non-protocol status? How did it complicate things, or did it?
Look, it complicated it in the sense that you couldn't just go and engage with clients like the way you did. We followed our lawyer's advice to the T and took their advice on how to transition over to UBS in a way that was legal and ethical in the way the industry is set up. And we followed that advice. When we did that, I will tell you, there are a lot of things that if we weren't bound by those rules, we would have probably liked to have done a lot of things a whole lot differently. And you feel like you are walking into a situation where you are at a disadvantage because you are following the advice of your lawyers. But when you eventually ended up talking to your clients and with the history and the experience you have with them, I don't think you needed the other things that maybe you wish you could have done. You follow the rules, listen to your lawyers, and rely on the relationships with your clients, and that's what we had to do.
And proof was in the pudding because you moved 100% of your families. So there you go.
Yeah. And Mindy, I'd add also, Billy and I, as we've probably mentioned through the course of this call, I think you can feel the tenor of our attitude towards Wall Street. Listen, we owe a tremendous debt of gratitude and appreciation to Morgan Stanley, Goldman, and UBS because we were trained by the best. And we built a good business there, and we worked very hard to make our bosses happy. And I think you do read in the newspaper about teams leaving Wall Street firms and doing, I hate to use the word, but just stupid things.
Yeah, they poke the bear.
Yeah, and they end up on the front page of the newspaper. Billy and I had to look at each other in the eye every day and say, don't do anything that you don't want to read about on the front page in the newspaper.
Yeah, I actually like that attitude. I agree with that. Even those that leave big firms because they are frustrated, there's a lot of pain points that are motivating them to leave. They absolutely need to and should be grateful to those very firms because that's who trained them. That's who enabled them to build the business that they did. And I have this belief that people wind up right where they're supposed to when they're supposed to. And I think that probably the same can be said of you. Let me ask you a couple other questions. So okay, you're almost at the 1-year point. You're over the hump of transition and you've moved all of your clients and now you're in growth mode again. What are some of the things that you hope to be able to do for clients in the future that you haven't done before? Or what are some of the things that you think about in terms of growing the business?
Mindy, one thing that doesn't quite exist, but I think it's moving that direction over time, and this would be really, Shannon could shed more light on this, but I think one of the things that would be nice to tuck into the RIA space and really the space at large would be if something like the accounting functions were brought in-house. Seems like that could be an interesting opportunity to do more for clients. And obviously, the accounting function is such an important component. And it is one of those where you're working with a variety of different accountants on various families. I think that's one thing I'm curious to see how the RIA space develops over the next few years in terms of maybe a trust company, maybe an accounting function, et cetera, that would be in-house to the firms.
So, as you think about growing your personal business, what is or what has been your best source for attracting new clients?
Mindy, you're asking us to deliver the special sauce. There's not a whole lot to it, but as the cold caller, I'll give you the inside story. It's not very hard to pick a town in Texas and find out who are the movers and shakers in a particular town. Just go to the internet and look at ranches and look at the museum and et cetera, et cetera. I don't have to give more away to advisors. They already know how to do that. And then writing a really nice letter and making a cold call still works almost every time. You would not be surprised probably to know with your experience in the industry, Mindy, that when an entrepreneur finds a letter on his desk requesting an opportunity to visit because that entrepreneur has been successful, that's really not an offensive letter. Now, you may not get in the door, but it's a congratulatory outreach. And I spend a lot of time writing letters, making cold calls. Now, 25 years ago, Billy and I didn't really know any client to say, hey, do you happen to know this family? Now, 25 years later, we have the opportunity to make some internal client calls, if you will, and find somebody in the network that might give us some opportunity to have a referral. But I will tell you that it's the way we were born. Billy makes cold calls. I make cold calls. We definitely are active. And honestly, it's an incredibly exciting part of the entrepreneurial business that you sent a letter, you got in the door, and 18 months later, that person becomes a client. For my personality, that is something that just gets you up every day and is really an exciting part of the growth side of the business, along with adding value to existing clients and accomplishing tasks for them in the course of their family history.
Yeah. And how about as you think further into the future, what do you guys hope to be remembered for? What kind of legacy do you hope to leave? Is this going to be a family business? Tell me what it looks like.
Really good question. I don't have a great answer for you. And I'll tell you, the reason is that day just seems like a far away. I know we're in our 50s, so we're not spring chickens, but we love what we do. I'm not sure what retirement looks like. 60 years old and sitting on a beach doesn't sound like a whole lot of fun to me. I love what I do, but I do rest knowing that when that day comes that I'm no longer able to work here and do this job. We've got a lot of clients that have become true friends, but again, as Russell said, you never forget that you work at the pleasure of a king. And there are next generations that you would hope to be able to work with. And I feel very good knowing that if they decide to stay with our team at Beacon Pointe or at our firm, that they will be in good hands because they are at a firm that's a fiduciary through. And so when that day comes, I'm going to be able to retire well, knowing that my clients are going to be well served. But what I'm going to be remembered for, it's a really good question. I don't have a great answer, so hopefully that's okay.
Yeah, of course it's okay. And I love what you said about feeling good. I will be able to retire or rest easy knowing that my clients and my next generation team members will be in the right hands. One of the things we talk with advisors about all the time in our work with them is to ask yourself early and often, if you feel like if you retired from the firm where you are today, would you feel good about that? In other words, do you feel that your firm would allow you to leave the legacy that you want to? And what you're saying is that even in these early innings, after 10 months of transition, which was hard, you have the sense that your clients and your next generation and your business is in the right hands.
I think that's right.
Yeah, I love it. Okay, good. So anything that keeps you up at night, anything that worries you, either about the industry overall or your personal business?
I wouldn't say anything. Billy and I don't show up to the office and we sit about 3 feet from each other on an open trading floor. So if something's going on in his mind, I can see it on his face. Mindy, I don't think there's anything really keeping us up at night per se. I do think that when you move from 25 years ago making a trade to 25 years later operating as a family office, a financial concierge, the responsibility you feel for your client families is exponentially greater because you're involved in so many decisions regarding different generations of the families that are not always easy. I think those things where Billy could look at me and say, are you thinking about so-and-so and this transition situation or whatever might be happening with a client family, and how do we help in that situation? We have some clients that are dealing with some health issues and went down to the hospital and took them out to dinner just a few nights ago. Those kinds of things, when you become so close to the family and they go from being a transaction to being just an entire career, those kind of things are what we probably, if anything was going to keep us up at night, it would be those kinds of things for sure.
Yeah, well, that to me right there is the definition of being a fiduciary. So I think you hit it on the head. One closing question for you both. What advice would you want to share if an advisor that is a colleague of yours, an ex-colleague of yours that was at UBS or Morgan Stanley or Goldman or elsewhere in the traditional brokerage field, what would you say to them if they said to you, I'm thinking about my career, I'm at this crossroads, I'm not sure what the next 10 years are going to look like. What advice would you give me?
It's a really good question. All I can do is talk from experience. I can't imagine doing this business alone. You have highs and you need good days and you need somebody that you can celebrate with, and you're going to have plenty of low days and you need somebody to help you through those difficult times. And so the structure and the team that I've had, the partnership with Russell has been invaluable. He or she did not have a partner. My encouragement would be not to go run and marry the first person that becomes available, but keep your antenna up and try to form a partnership. 1 + 1 = 3. Over the years, we've had a couple of extra partners on our team, but Russell and I have been the core from the beginning and the core to now. I don't know what the magic number is, but it's greater than 1.
Love it.
I would say this. We have some amazingly dear friends for decades that will likely always remain in the Wall Street space. And boy, you can have an amazing career and do amazing work for clients and move off into the sunset in that particular realm, look back with great pride and appreciation for your career. But if you are one of those people that looks and say, wow, I might want to be a part of a boutique that is on the cutting edge of the industry, and I might want to have some influence in the direction they're going. And I think my clients would actually enjoy being in more of a boutique experience than in the big firms. Totally opportunistic. It is a road where you might be surprised how many clients would say to you, I've been waiting for you to come and tell me this. If you have that entrepreneurial drive, and I'm not making a case that's better to have it or not to have it. Some people don't, just personality traits. Billy and I were driven and are driven by that entrepreneurial drive to build and continue to improve. And doing that in a boutique environment is exactly what it was born to provide you. I think doing that in Wall Street is more challenging. These are mature, big industry players. I think the boutique environment is where you really can exercise that muscle. And so if that's you, man, there is an exciting world that is only growing and only calling to you. And as you said, Mindy, you'll know when it's right, but it's been a great, exciting, and wonderful adventure for us so far.
Well, thank you both. Your story is wonderful, and I can sense your excitement, your commitment to each other, which is really notable, and your commitment to your clients. I'd say your clients are lucky to have you as their financial stewards. So it has been a real pleasure, both of you. I'm grateful for your time and your transparency, and I look forward to continuing the dialogue.
Thank you, Mindy, so much. We very much enjoyed it.
Thank you, Mindy.
Curious about where, why, and how advisors like you are moving? Download the latest Advisor Transition Report to learn more, including intel on recruiting deals and our insight and analysis on the latest trends in the wealth management space. You'll find it at diamond-consultants.com/transition report. Or if you'd like to talk, feel free to give us a call at 908-879-1002.